Perfect. Okay, so let's start the pre-market webinar with just a quick notice that tomorrow is a US bank holiday or a US holiday. It's the MLK. So the US markets will be closed. FX should be relatively normal, a little bit less volume, but US markets specifically, so Nasdaq, S&P, equities, will see significantly less liquidity and volume. So just keep that in mind. We have got a couple of different things coming up this week as well. We've got a Trump speech on Wednesday that will likely be regarding tariffs and industrial policy. We've got a Supreme Court hearing on Wednesday as well on the Fed governance and Cook removal. We have got a lot of Chinese data coming out on Monday, and we have the Bank of Japan decision coming out on Friday. The markets have currently priced in a hold by the Bank of Japan, so I wouldn't really expect any deviation from that. I haven't seen any signs that the Bank of Japan can continue hiking, at least in the next decision. Sorry, I'm just checking my notes to get these off the list, and then we can move on to some trade ideas. But that's actually pretty much it. So there's a lot to go over, or a lot of ideas to go over, actually. And finally, back in the flow of the markets, we're starting to see some opportunities come back as well. Obviously, over December and New Year period, the markets were quite slow, quite quiet. The news was pretty dismal in terms of events and things to pay attention to. So what we will have a look at today is the Aussie-New Zealand, Euro Pound, Euro-Australian, the NOK SEK, Euro HUF, which is the Hungarian currency, S&P, Nasdaq, gold, silver, and we'll cover a little bit of copper, dollar yen, and the Australian dollar, US dollar. So we're just going to jump right into the Aussie New Zealand. Now, this market is interesting because as we've been talking about for the past couple of weeks, it's in a little bit of a problem area. Now, fundamentally, this is completely fine. The move is completely valid. There's no reason really for it to really change trends. However, the dynamic of the Aussie New Zealand is very similar to Euro Pound in terms of the economies are very, very closely linked. They're very correlated. So it's rare to have these sort of large breakouts and a continuation. As you can see, this range has been in place since 2013. So it's taken 13 years for us to actually break out. We tried here, when was this? Back in 2022, we attempted and completely failed. So it's something to keep in mind. So even before this range, we were stuck in a range back here. So it's one of these markets, it's tricky really to be a buyer because if we end up buying up here, there is a chance we're going to mean revert and just come back into this range. However, the fact that we've cleared this previous high is telling me that we could continue higher. Next target would be around here. Let's just ballpark it at 122. Now, these are, just keep in mind as I go through this webinar, I'm using spread betting prices, which will deviate from CFD and futures prices. But in terms of price action and levels, they should be relatively similar. So let's go down to the H4. As I said, although the price action and the movement is a little bit of a concern, the fundamentals still completely back up buying. There is nothing really to deviate from that idea. So just to quickly cover, we've got the RBA is basically expected to ease or cut later than the RBNZ. So there's a nice little central bank divergence there. The RBA is actually relatively hawkish right now. We've got China. China beta is positive for the Australian dollar. And overall, we just have weaker data coming out of New Zealand. So we've still got a nice central bank divergence. So we've still got an economic divergence there as well between the two currencies. So I'm looking for a 50% retracement back into this level. And this will come and retest previous support. It would also provide another retest of this previous high back here. Now, whether we're going to get a perfect pullback into this 50% retracement level and then the continuation, in my opinion, is actually quite unlikely. And the only reason is because but the fact that we've already been to this level, we've continued to reject, and then we had the push, is telling me that actually we might be just ready to lift off from this current support that we're at right now. I'm not going to be taking any trades tomorrow. Again, it's the US markets are closed, so I like to take those days away from the markets. But I will just be paying attention. If we can end up coming back down, perfect. We'll be looking to buy. If not, that's fine. If we end up having some nice bullish daily candle close here, then I'll look to buy with, unfortunately, a larger stop loss just under the 61.8 fib level. We've also re-established a bullish trend here on the H4, which is nice with our 50 and our 200 moving average. So there is nothing really to tell me that this trend is over. It's just, again, take caution with that mean reversion because you don't want to get stuck in that. Something you got to pay attention to, as I said, because this is such a sideways market, generally speaking, you don't want to run with a bias that breaks. So what you will often see with retail traders is they will have a bias, whether it be, let's just take Aussie-New Zealand for an example. They will take the idea that, yes, we've got the central banks, we've got the data, everything currently is supportive. And then we'll come down here and they'll start buying. And then we'll come down here and they'll look to buy again. And they'll just keep buying supports, and then they'll end up back in the range and getting chopped around because they're not really keeping up and they've got married to the idea. So I'd be willing to give that idea 2 attempts, which again would be at the support level or at the second support level. After both of those are done, if neither of those work out, then yes, I would be calling it a day on that idea. Moving forward, we have the euro pound now. Exactly the same dynamic. Both economies are very correlated, so it's not uncommon to get this horrible sideways range. Now, I say horrible, it depends, if you're a range trader, this would be perfect to just sell resistance by support. However, for a trend follower like me, it's not great, really. Now, I've been very on the fence about euro pound because there's been already quite an aggressive leg to the upside here, which was obviously a lot of pricing in of the data and basically what we're still looking to trade. So we don't really have any new dynamics, and if anything, we've actually seen a little bit of an improvement in the UK. However, I don't think that changes the idea. I think we could still be buyers. The Bank of England is still likely to cut way ahead of the ECB. Eurozone disinflation advanced, but domestic is softening. It's not catastrophic. The UK domestic I'm not even going to bother saying that word. Basically, the mortgages, consumption, labour is a lot more fragile within the UK. That's what I was trying to say. So yeah, overall, we're still pretty good here. So I could see the Bank of England cutting before the ECB, which again gives us that little bit of a divergence there between the central banks. We are coming into this really nice level of support as well. However, the reason I've been on the fence here is because the trend on this H4 is very clearly bearish. Again, just using these moving averages as an objective trend identification tool. If we go to the daily, what we've also got here is the fact that price is really struggling to hold above this 200 moving average. We've already had 2 opportunities. This daily bullish candle, if we were going to, I thought we would have continued from there. We had another opportunity on Thursday. Again, if we were going to continue higher, that kind of would have been the time. So I'm just paying attention really here. Are we going to end up coming lower and starting a new daily downtrend? If so, I'm going to scrap the trade idea completely. I need to see the trend continue in a healthy direction, a healthy development in the trend. Having said that, the weekly is actually looking very nice. We've just flipped bullish. So the other opportunity would be if we could come down to this weekly level of support here, retest, there we go. Come down to this weekly level of support, retest these moving averages. That would also be quite a nice idea to be a longer term buyer back up into the previous highs at around 92.80. So there's a couple of different ideas on euro pound, but it's not a good chart. As I've already said and showed you, it's very sideways, and these sideways movements aren't just clean up and down. It's very choppy and ugly. So navigating is going to be tricky. The idea is there, but again, it's just trying to leverage some sort of entry in might be a bit of a problem. Excuse me. So we will see about that one. Now, Euro-Aussie, we actually have a pending order already on this market because it's really nice. It's one of my favorite setups at the moment, actually. So although I said the ECB might be cutting later, that's obviously relative to the UK or the Bank of England. However, compared to the RBA, which is the Reserve Bank of Australia, we've got a very nice dynamic here to continue running lower with a hawkish RBA, a relatively neutral ECB. So I'm looking for a retest back into this 50% retracement level and a continuation down. This is a very, very simple trend play. Again, we've got this really nice downtrend here with our moving averages, fib from previous high to previous low. We've already formed this sort of level of resistance. So it's kind of just a very, very simple idea of waiting for another pullback, and then we look for the entry. And this is obviously, again, lining up with previous structure throughout this level. So it's a very bread and butter idea. There's not really much else to go over. I would be looking to target the previous lows here on the daily time frame around, what level is that? 168. So yeah, and again, sorry, the daily here is actually just flipped bearish as well, which again is a really nice sign that this market is now confirmed into a downtrend and we could continue to see this market run. So yeah, let's see if we can get the fill. Obviously, that was sent as a signal for members. Moving forwards, we have the NOK SEK. Now, this isn't something we talk about too much. We don't really cover emerging or exotic markets at all in Elite Traders, just because they're a little bit more difficult to navigate. They're not something that everyone trades or has access to. The spreads can be larger. The fees can be a bit more expensive as well. However, the fundamentals are actually very bullish at the moment, in my opinion. So the problem really is that it's very much like pound Swiss. In terms of its trend, it's very aggressive to the downside. Buyers are really struggling in this market. However, I do want to be a buyer. So at this point, it's more a case of I would need to see a very, very strong confirmation that we can continue, or at least have some sort of pullback on the weekly, daily timeframes for us to get in on lower timeframes. Now, I'm looking at the support level here on this daily time frame. Again, it's a trade I like, but I don't think I'm going to execute it just because I don't like the way that the higher time frames, so the daily and the weekly, are formatting, are developing really with this aggressive downtrend. But I did want to mention it in case any of you do trade these markets. But yeah, I like the idea, but again, it's a little bit of a difficult one to really be a buyer of. You'd really be trying to fight the trend there. So just to explain why I want to be a buyer, we've got Norges Bank is easing slower than Risks Bank. Sorry, excuse me. So there's a relative carry premium. The domestic Swedish demand is weaker. We've got the NOK is benefiting from energy linked to external balances and cleaner Scandinavian divergence without US dollar distortions. So again, all of the full breakdowns will be sent to members in private. But this is just to basically give you sort of a bullet point idea. So next is Euro Huff. Now, again, this is one of those markets that we don't really cover too much in Elite Traders, but again, it popped up on my radar. So I wanted to inform you of it. Now, I do want to be a buyer. We do have technically an uptrend. However, it looks like we might just be crossing now into a bearish trend, which isn't too much of an issue. But I do want to just pay attention to this level here. So I'm not looking to be a buyer just yet. This is probably a trade I'll be looking at in maybe 2 or 3 weeks ahead. So I'd be looking really for this 368 level. So the weekly is technically bullish. Technically bullish, but barely, really, really rough. The daily is bearish. So again, really not ready to be a buyer just yet. We've currently got this high, formed a lower high here. So it's now sort of just expected for us to come down into that support level, and then once we reach there, we'll obviously be down on the 84, and we'll be looking for a really nice trend change with the moving averages, and we'll just be looking to benefit from some short-term momentum on this market. But yeah, right now there's not too much for us to do. Moving on, we have the S&P. Now this one I actually really, really like, not because I'm necessarily looking to trade it just yet, but it's just a nice formation. So although actually I would like to be a buyer, but we'll move on to that idea in a minute. So if we look at how the S&P has been developing, it's sort of a rinse and repeat. So we have a crash down here. When was this? 2020. So we had the COVID crash down here, complete pullback and make new all-time highs. Then we pull back to the just sort of the tippy top of the market correction, or whatever you want to call this level. We pull back almost perfectly. Then again, we have a continuation higher. We pull back again to these previous highs, and this is on the weekly time frame if you want to copy it. And then again, what do we have here? Well, we have this crash from tariffs. So we've got this level here that I've marked up. So are we going to see exactly the same thing where we run up? It could be 26%, could be 36%. It doesn't really matter how much. But this would be a level where I think being a buyer could be a big advantage over a long term. So when I say buyer, I mean sort of a more either a position trade or an investment, whatever. So yeah, that's currently what I'm just a little bit cautious of, is a pullback to around 6100. Now, when I'm saying this, I'm not saying we're going to end up coming down tomorrow or this week or next week. Remember, these are large moves, 26, almost 27% on this one. This one was almost, let's just say 36%. So if we just say 32%, we've still got a large amount of room to for this market to run higher. So I'm not looking to actually be a seller by any means. But again, I just wanted to put this on your radar in case you were interested in that. So short term, I would still like to be a buyer. The market is still very, very bullish. The fundamentals are still very bullish. We've got resilient earnings. Sorry, 1 second. I'm just reading notes, making sure I give you the correct information for the correct markets. So we have obviously Fed cuts. Now, we're not expecting the Fed cut to come in the next decision, but we are looking at further cuts into 2026. Potentially, obviously, it depends how the data develops, but right now that is currently the situation. And we're not looking at any recessionary indicators right now. So it seems like the equities and the indices markets can continue this drift to the upside. Lower timeframes in terms of entries, we've got two different options here. So we could either go for the longer term view here, where we're looking at the low to the high, and we'd be looking for this 50% retracement into sort of previous structure. This one's not super clean, but it is valid to look at for now. Or we've got the shorter term idea. I quite like the shorter term idea, to be honest, for maybe the initial buy. If it doesn't work, fine, we can look again down here. But this one would be from, again, the most recent low to the most recent high, looking for this 50% retracement, which actually we did get on Friday. If anyone saw that Friday move, it was a little bit brutal on lower time frames. But we came into this 50% retracement, rejected, and obviously we are coming back in now. So it'll be interesting to see how we get this reaction. If we do see a bullish reaction, then obviously I'll be sending a long signal and we will be looking to buy from here. And basically just run it up to around 7,000, 7,500. That's sort of my targets on the S&P for now. Well, I'm saying that like the short-term targets. 7,000 is incoming quite soon. 7,500 is obviously a longer-term idea. But it'd be a case of if we entered, we would just trail stops. It wouldn't be a hard take profit type trade. It would just be trail stops under the recent lows and just let the trade run for basically as long as possible. Moving on, I'm not going to cover Nasdaq too much. It's exactly the same dynamic in terms of the fundamental drivers. We don't have exactly the same format, but it's very similar. We have the downside and then pullback, retracements back into the same level. Same thing here. We have the crash, pullback. So again, it's just are we going to get this pullback into the previous highs? Very likely, actually, on the way that we've seen this, the markets behave before. On lower time frames, the setup is very similar. Although it's definitely not as clean. So I wouldn't really be looking at the Nasdaq. I mean, to be honest, I actually prefer the Nasdaq. I'm quite optimistic about AI at the moment. So I think being in Nasdaq, obviously to benefit mainly from tech, is quite a nice idea. But in terms of technicals, I just don't really see much to trade from at the moment. If we could get a break above the highs here, retest, I'd be looking to enter on a retest and then continuation. The other idea is maybe we either come down to this trend line. I don't really like trend lines, but if that happens, that would also be a double bottom here, which would maybe be a good opportunity. Or we've obviously got this support level as well. Anyway, moving on. Actually, let me just check one thing. 1 second. Just seen there's some messages here. Technical difficulties again. Can't hear anything. Can you not? Can you? Please don't tell me I've been talking to myself this whole time. Just waiting for Greenland invasion. Yeah, I think I'm gonna have to send a document. Document out. Okay, so you can hear me fine. Yeah, so regarding Greenland, I'm not going to go over it in this webinar. I just don't have time, but I will be sending out some information about it, obviously in the analyst updates. What do you think about long US dollar CAD? We can move on to that after this. Ian, okay, cool. So it is fine. Great. Let's get back on topic. Where was I? So we just did Nasdaq, gold. Yeah. So gold is still a good buy. I don't think there's really anything to say. We should all be fully aware of the situation on gold. So I'm not even really going to bother going over the fundamentals, but we can just have a quick look at the technicals because I actually missed my opportunity to be a buyer. So again, on Friday, we had the Trump and Fed Trump and Fed debacle, if you will, which provided some nice volatility into the market. So I was looking to be a buyer on this previous high, very typical break, and we had the retest, which is what I wanted to see. But obviously, due to the volatility and the speed of this move, I didn't feel comfortable buying, just in case we ended up coming much lower. However, the idea is still there. So if on Monday, Tuesday, Wednesday, whenever, we can come back in here and create maybe a double bottom off this previous wick, again, that would be a really nice opportunity to be a buyer. Now, with gold, this is one of those markets at the moment. Now, don't take this as financial advice. Take this with a grain of salt, because things can change between now and whenever you decide to execute. But the way that gold is right now and has been recently, it's more a case of just getting the entry. The direction, you don't really need to even think about. It's just a case of buying gold. But if you can manage the risk, you can manage the position sizes. It's a case of buy gold here. If you stopped out, fine. Buy gold again here. Buy gold again here. Buy gold again here. It's just a case of buying at previous levels. Now, I know that might sound very, very questionable to some people, but if you go back and look at gold, being a seller has been futile. It's just been very, very difficult, really, unless you could time it perfectly and catch profit-taking moves like this. But overall, it's just a case of buying off previous structure, and you would have been fine if you can manage risk, and you'd very likely be in very good profit by now. So that's the idea, really. I'm just waiting for some levels on gold to get hit, and then it's game over, really, in terms of the trade idea. It's just let it run. Moving on, we have silver. This is everyone's favorite metal at the minute. It seems like everyone's moved away from gold and everyone's talking and looking at silver. So silver is still structurally, fundamentally, in every aspect, a phenomenal commodity to buy. There is nothing really to say negative. However, on that note, there is something we obviously need to pay attention to, and we can't ignore, is this massive move on silver. Now, if we just look in the past, silver's had rallies of, what was this one? 160%. This one was 100, let's just round it up, 180%. This one is now 230%, roughly. So what I'm kind of expecting, really, is some sort of crash. Now, when I say a crash, I'm not saying, we're going to have a whole correction within a couple of days. I just mean I wouldn't surprise me if we end up seeing something like this, where we end up just correcting some of this move and then running higher. So the way I'm looking at silver right now, fundamentally, as I said, it's phenomenal. I don't have a reason to be bearish on silver. I don't think anyone really does. But what I'm very cautious of is everyone jumping in. So I'm looking at it now more of an aspect of like a meme stock, if you will. So if you look at the way that the markets move around crowd sentiment, so if we look at GME or Bed Bath & Beyond or any of these stocks, and I'm using this as sort of a rough example, but hopefully it tells you, you get the idea of what I'm trying to say. When crowd sentiment is extremely bullish and we see moves like this, the chances of a complete move down are very, very high. Now, what that would do is get rid of the paper hands. It would reduce the leverage a little bit. It would actually be a very healthy thing for silver to do. And then we can actually look to be buyers. I will not be a buyer of silver up here. I refuse to do it because I think that it would just be chasing the top. Now, on the other hand, it's difficult because I'm thinking of this from like two aspects. So yes, there's the aspect I just sort of said, it technically is very, very overbought. But then if we just go back and have a look at gold, we could have said the same thing. So if, when gold was back down here, had this parabolic move at the time, then had a pullback, then just ranges sideways for a little bit, another parabolic move, pullback, continuation. So that's kind of what I'm expecting. So I'm not saying I'm going to be selling silver, but it's just a case of half of me is thinking that this is actually one of those things that can just run significantly higher towards 100, which again wouldn't surprise me. 100 is obviously a really, really key level, psychological level, round number. So that's kind of the cutoff point. I would be okay, maybe buying silver up until 100. After that, I think I'm going to take hands off and just watch for a little bit from the sidelines. If we can see a pullback into this fib, into the previous highs, retest, that would be kind of the only buying opportunity that I would take. If that doesn't work, that's it, I'm done. But yeah, that's really all I've got from a technical aspect. I'm just very, very cautious of the speed and the amount that silver has moved. Now, moving on to copper. Now, this is for my UK traders. This will be quite specific to you. So if you are trading on CFDs, this doesn't apply to you. But if you're trading on spread betting account like I am, you will notice that the copper is an extremely expensive, an extremely expensive position to hold. So the overnight fees were, I think I would be paying £30 per night just to hold the position if I had £1 per point, which is obviously it's a ridiculous price. It's very, very high. Now, considering I want to hold copper for 6, 12, 18 months, the amount I would be paying on copper is outrageous. It's just not worth even attempting to. So my other option, which is what I'm going to do, is trading an ETF for copper, which is a Global X Copper Miners ETF. And this is just my leveraged, not my leveraged way. This is just my way into trading copper by a proxy of an ETF rather than trading spot copper. Again, it's just one of those things. When you develop as a trader, it's not just about is the trade going to work. It's about how does the trade work? What are the dynamics? What am I going to pay? What are the fees, etc., etc. So that's one of the big things I'm accounting for. Now, because this is an ETF, it's not a case of drawing support and resistance and we draw a fib and it's just buy here and things like that. What I'm looking to do on silver is more of a overtime accumulation. So I'm looking to just basically buy potentially every week, maybe every Monday, maybe once a month. It's just not looking at the price action, buying copper as a long-term hold. Now, the reason I'm looking for copper to basically buy and hold, as I said, is China is seeing a little bit of stabilization. We've seen PMIs above 50, which is showing expansion. Their exports are relatively solid and the demand is intact. We've got secular demand via electrification, grids, EVs, which is electric vehicles, and of course data centers with the up and coming AI. Now, AI, that's a separate topic, but I think AI is here to stay, and I think it's only going to get bigger. We might see a little bit of a bubble pop in the short term, but I think it's a bit like an internet situation where we had the 2000s bubble pop with the internet, but what are we doing right now? Well, we're using the internet. It's massive. I think it's going to be basically the same thing with AI. So yes, I want to be buying into copper. It's also a very good commodity. So if we look at the way the gold, and now these aren't comparable one-to-one, but just in terms of the general flow of metals, gold has had a fantastic couple of years. Silver has had an absolutely parabolic period sort of in recent times. Copper has been doing very well as well. Copper is still very cheap. It's around $5. So I want to be holding copper for basically as long as possible and just use it really as an investment and a long-term hold on the portfolio, just to give me a little bit more metals exposure. Okay, so moving forwards, we have dollar yen. Now, I'm not really too interested, so I've basically got all of these ranked. I sent you guys a picture actually in the public chat showing some of these ideas. You will, if you paid attention, you will see these conviction levels. So the ones I'm going to be showing you now, the conviction on them are not that high, but they are something I'm interested in potentially. So dollar yen, we've obviously got the concern about an MOF intervention, which is the Ministry of Finance in Japan. They're the ones that do the interventions. It's a little bit of a concern, but it's not a trade breaking idea. It's a trade waiting idea. So if you look at the way interventions have happened before, it's a case of, oh no, intervention, oh wait, we're back. We bought all of that dip and we're going to continue higher. It's not a case of, oh no, intervention, let's not trade, or the market's going to crash or the trend's going to change. It's, in my opinion, it's just a way to buy a dip. So I'm not necessarily put off of the trade idea by that. It's just one of those things where I'm not going to be having large amounts of risk on yen pairs just in case we do get it, and that gives me an opportunity to actually add in better prices. So obviously we are getting paid to hold dollar yen long, so it's kind of like a easy buy. Even though we've got rate hikes in Japan, or we've had rate hikes in Japan from negative interest rates all the way up until now, where their rates are currently at 0.75, if I'm correct. I think it's 0.75. It's still a positive carry trade. So it's a case really of just looking to possibly even buy on Monday or Tuesday. Again, we do have a US holiday on Monday, so maybe Tuesday would be a better idea. But we've already had this really nice 50% retracement. The technicals are very simple, but if we just go back to the weekly very quickly, I'm just looking at this double top here. We have seen last week, obviously, we saw a little bit of a rejection, which is a concern for me. So again, the entry I've got on the H4, or the potential entry on the H4, would be the only one. If this doesn't work out, fine. I'm going to sit out of it for a while, just see how it develops. If we do get that intervention, then we can buy that. But yeah, again, the conviction isn't super high just yet, but the idea is there, if that makes sense. So in terms of targets, I would be happy to say we can come up to obviously this all-time high, and then we can basically continue from there. I think it's likely we'll see a little bit of sort of stuttering or a little bit of slowdown in between these levels, or sorry, at these levels. But again, the idea and the fundamentals are still completely supportive for dollar yen longs. So there's more of just a timing issue in that market. Next up is the Australian dollar against the US dollar. So we've got obviously China stabilization, as we've already spoken about China slightly. The RBA is slightly hawkish, and the US is stable, but we've obviously, as we've already discussed, we do have the Fed cuts in view for 2026. So there is a little bit of a central bank divergence. However, this really depends on you, and this isn't a trade I'm going to take, but again, I just wanted to mention it. It depends on where you stand with the dollar. I am not bearish on the dollar. Actually, I'm actually significantly bullish, and I'm going to show you a trade that I've got planned. This personal trade, slightly later actually after this one. So I'm not going to be short in this. Again, as I just said, I'm bullish on the dollar. However, technically, we've had this downtrend and we've actually just broken. So if you are a technical trader, you'd probably be looking for this retest and continuation to the upside. On this weekly, on the H4, the technicals also are looking great to be a buyer. We've got this previous high, previous double top. We've come down, we've continued to retest and reject. The fact we haven't broken lower is a little bit strange. Not strange as in I would expect that, but strange as in if we were going to come lower, it looks like it would have happened by now. And we are hovering at this fib zone between the 0.5 and the 0.618. So again, technically, buys look really, really good. And I'm bullish on the Australian dollar and the US dollar. So it puts me in a position where I just cannot trade this because my bias is for both currencies. Does that make sense? But again, it depends where you stand, what your analysis is telling you. But just to quickly go over what I was just talking about with the dollar, if we look here, US dollar is having a pop to a score of 58. Bearing in mind it was around 30, I think 1 or 2 weeks ago. So the recent data has significantly improved the dollar perception. We've got higher GDP. We've had higher retail sales, higher services. We're actually seeing services show expansion. PCE came in slightly cooler. Wage growth is higher at 3.8. We've got unemployment coming down. We've had jobless claims also coming down. Obviously, NFP's not been great, and JOLTS hasn't been fantastic either. So I'm definitely not saying that the dollar is a blind buy, it's super bullish, but I just can't justify being a seller of the dollar yet. Now, if we also take a look at the dollar index, we can see here. Now, this is the weekly time frame. I've been talking about this for weeks, probably since like late 2025, really. But I just don't see this market breaking this level. We've also got COT positioning, which is showing the institutions are still buying the dollar, or sorry, of actually starting to flip on the dollar. So let me just show you that as well. If we go to sentiment, COT, we'll go history. So here. So generally what we see on the dollar is COT will hover majority bullish. Now, obviously this flipped in sort of mid 2025 into quite significantly bearish actually. However, since sort of late December, we've been seeing smart money rebuying the dollar. Now it's been relatively flat over the past couple of releases, but the fact that we're not seeing these shorts maintain around here or shorts getting added is a good sign. Again, with the increasingly positive US data, the fact that the US dollar is at a really, really nice level for buyers, I just can't justify being a short seller. Let's just quickly go on to Euro dollar, which is my personal trade idea, and then we will call it a day. 1 second. Have I got it on the watch list? Where is it? Here, Euro dollar. Let's get the actual market. There we go. So this is what I'm looking to do on euro dollar, which is basically sell the hell out of it. Now, when I say sell the hell out of it, don't take that literally. I've got a very, very strict plan. That's basically all I've been working on this weekend is my whole trade thesis for this. So I've got an invalidation level here at 1265. So basically, if euro dollar comes up to 1.265, 1265, whatever level I just said, this trade will be cut because it's no longer valid. So I'll realize the loss. However, if we look at what's going on, so let me just hide the orders so you can see this a bit more clearly. So we've got this monthly time frame, we've got the high and we've got the low. That's putting us right on this 50% retracement level. This is a third lower high on a weekly time frame. Weekly. And it's also retesting this nice level of what was previously support and resistance. So overall, I think the technicals are really, really nice actually to be a short seller. Now, the dollar, as I said, I'm not overly bullish just yet, but I do think that's going to increase over time. So I'm putting money where my mouth is. So I'm basically looking to build what I call a ladder or a DCA. So for any of you that don't know, DCA is basically where rather than having, I don't know, let's just say one lot entry here with a stop loss here and a take profit down here, you would split that one lot exposure into smaller pieces. So let's just say 0.1 positions. So you'd have 0.1, 0.1, 0.1, 0.1, and so on until you've reached your exposure limit. And then you'd leave it and let it run, obviously playing on your overall macro bias and thesis. So that's what I'm doing on euro dollar for now. The positions I do have, so let me just be very, very clear so no one copies this. The positions I've got, you can see here, are extremely small, and they are spaced out incrementally every 1.1 increment increase, if that makes sense. So yeah, that's the idea. And the total loss on this position, if I do have to invalidate it, will be 2%, which is, for me, that's completely fine. I'm happy to take that risk. So that's the plan I've got. Now, again, I'm not telling you to copy it, but I want to be transparent. So I don't think I'm missing anything. I was looking at a pound dollar short. However, I'm not overly keen on that one. I just don't see the UK being strong enough at the moment. That could change. So I've left the idea open for now, but it's just not ready. It needs a catalyst, really. But yeah, that's it. So if there's any questions, let me know. If not, then I will end it here. Russell and DAX looking good for longs on pullback. Yes, the Russell, you're right. The Russell and the DAX both look great. In fact, a lot of the indices and equity markets are looking fantastic. Unfortunately, I think I missed the Russell, and I don't really swing trade the DAX, but I think being a buyer of both is completely valid. Okay. What do you think about the analysis I did? Yes, it's good, Doozer. I'm going to take a look at that after this. But yeah, overall, I'm quite impressed with your progress, actually. But anyway, guys, I will see you all later. Enjoy the rest of your weekends. And I will see you all on Monday. Stay safe.